The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing. Getting my chart up and running here in Tiger TV. Thanks for your patience there. Should be showing now. My friends in Florida will let me know if that is the case. But happy Thursday. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648. That's the number to use to give me a call. Talk about this market. You can catch my show every day on TFNN from 3 to 4 Eastern, just before the Tom O'Brien Show from 4 to 6. You can get my show as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in. You're out for a walk, out for a jog, out and about. Just open your smartphone browser. Just type in tfnn.mobi, and you can get the stream that way as well. And Tiger TV, you can see not only hear the audio of the show, but you can also look at charts live right along with me. Tiger TV is viewable on your handheld device, and it is also available at tfnn.com. Channel 1, the show is carried live, and it is archived on Channel 13. Folks, don't forget about the Holiday Tiger Dollar promotion right on the homepage of TFNN.com. Purchase Tiger Dollars and we'll donate up to 10% of your purchase price to the Salvation Army. You can use Tiger Dollars to get great bang for your buck when it comes to newsletter subscriptions and other premium products at the site. Sign up by December 19th and get a 25% bonus match on any amount over $500. So it's a good deal. Save a lot of money with Tiger Dollars, so be sure to check that out. All right, checking out the major averages here. S&P 500 trading up near its high, only up about almost 3 points on the session, 0.2% gain to 1411. Call it 1412. Hits an intraday low of 1406. Thereabouts, but overall, not a bad performance for the S&P 500. Still sitting underneath its 50-day moving average here. Will enough juice come into this market to eventually propel the S&P 500 back above its 50-day moving average and hopefully even higher? We do have a jobs report tomorrow. The data is likely going to be skewed from Hurricane Sandy. So I don't know. I'm starting to get the feeling that the estimate right now is for non-farm payrolls to increase by 90,000. That is a little about half of what was seen in October. I believe that estimate is taking into account Hurricane Sandy, but we'll see. We'll see how the market responds to it. Even if it comes in below 90,000, this market to me, feels almost like a little bit of a coiled spring here. It obviously could go either direction from here, but I still think there's money on the sidelines that wants to come in. So we'll see how the market reacts to the jobs report tomorrow. So that's a look at the S&P 500, the NASDAQ composite. It's really moving as Apple moves. Tech index having a okay day today, up 11.5 points, 0.4% to 29.85 is the last price on the NASDAQ composite. It too is underneath its 50-day moving average, so it's going to need some heavy volume buying to propel it past its 50-day line, which is currently at around 3,009. So that's the NASDAQ composite, and let's check in on the Dow Jones Industrial Average. It is up about 50 points today. Not much of a gain there. Last price 13,049. And that's a look at the Dow Jones Industrial Average. Taking a look at volume on the exchanges. Yesterday on Wednesday, NASDAQ volume totaled 1.77 billion shares. We are tracking a little bit lighter than that today. Not by much, only about 4% lighter on the NASDAQ. Yesterday on the NYSE, volume was slightly above average at 756 million shares. We are about 15 to 20% lighter than that today. A big reason for the above average volume on the New York Stock Exchange on Wednesday was that Freeport-McMoRan, FCX, had a very big day of trading, and that skewed NYSE volume just a little bit. So that's what we have with the major averages here. What the bulls should be happy about so far is that there's been distribution is relatively contained in the market so far. There have been 2 higher volume declines in the NASDAQ composite in recent days. There's only been 1 in the S&P 500. So that's not enough to really cause problems for a rally. The tricky part right now is kind of finding the actionable buy candidates, because at least in the screens that I use, they're not really jumping out left and right like I would like to see them. And as I've been saying in recent shows, there seem to be just as many stocks acting poorly out there that are acting well. So current holdings in my model portfolio are for the most part behaving okay. I've got 5 long positions and 1 short position currently open. So if you want to see what my model portfolio looks like and also see what stocks we're watching that could be leading stocks going forward, you can check out 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com. Just click on the Newsletters tab and then Investment Newsletters. You can read all about Ultimate Growth Stocks right there. We had the euro lower today, and that has brought money into the U.S. dollar. Pretty big move for the U.S. dollar today, up 52 ticks to 80.29, back above that $80 level. There was some talk that an interest rate cut could be coming from the European Central Bank. Today, the ECB offered a downbeat outlook on the Eurozone economy, but said that they expect growth to return in the second half of 2013. So money coming out of the euro is going into the dollar today. So the market's performance actually is pretty impressive considering the spike in the dollar today. February gold up $8 today, 0.5% gain, settles at $1,701.80 an ounce. Its first gain in 3 sessions. Remember, on Wednesday, Goldman Sachs lowered its 2013 end-of-year price forecast for gold to $1,800 an ounce. At the end of 2014, Goldman sees gold at $1,750. Crude oil today down $1.62, 1.8% decline, settles at $86.26 a barrel. Chip stocks, let's take a look at that. We haven't looked at the Philadelphia Semiconductor Index in a while. Really the only stock I follow in that space with any amount of regularity is ARM Holdings. They have a big presence in the tablet and cell phone market. Here's a look at the Philadelphia Semiconductor Index. To its credit, back above its 50-day moving average. It's been rallying right along with the market here. Chip stocks, the SOX is right now up 0.8% to 377.32. Chip stocks got a lift today after Broadcom raised its fourth quarter earnings outlook. So good news from Broadcom. Don't really look at this stock as a leader, even though it is outperforming today, up 2.5% to $33.15. Broadcom's chips are in the iPhone 5, but again, when it comes between Broadcom and a name like ARM Holdings, I'd rather wait for ARM Holdings to build a nice base, and that one seems to have better growth prospects ahead. Another chip maker looking pretty good here, showing relative price strength with decent growth prospects as well, is Cree, C-R-E-E on the NASDAQ. Shares up 3.3% today to $32.76. You can see exceptional relative price strength from the chip maker. So overall, the chip maker's having a pretty good day today. And again, a lot of that is due to raised earnings guidance from Broadcom. All right, let's take a look at another wild day of trading for Apple. Earlier in the day, Apple hit a 9-month low of $518.63. It has recovered. It is now up $5.66, a little better than 1% to $554.45. I will be watching the Tim Cook interview tonight on NBC's Rock Center with Brian Williams. I believe that's on at 10 o'clock at night. Part of that interview was released today, where Tim Cook said that one of the existing Mac computer lines will be manufactured exclusively in the United States next year. So nice PR move for Apple. There's just been a lot of talk about what's going on with Apple. How does the stock correct from $700 down to $520 a share? Simply put, this is a stock that has been under distribution since late September, and it's a stock that remains under distribution. Period, the end. And that is the reason why I don't care to own it right now. I won't be owning it in the near future. It's a technically damaged stock, and there is a tremendous amount of uncertainty going forward about not only profit margins, they're likely to remain under pressure, but what is going to be that new product that is going to drive growth going forward. To me, this is a stock that looks like, the market is pricing in slower growth ahead. Bottom line is just a stock that's under distribution. Apple, it's hard to find any analyst that says anything bad about the stock, and Apple certainly has its share of fans. And I wish longs well in the stock. There are plenty of stocks out there that are go up that I'm not going to own. If Apple continues to rally here and retests its some of its resistance levels right around $600 a share, congrats to the longs, but I think there are better fish to fry out there right now, and that's generally my take on Apple. I generally don't like to own stocks that are being liquidated by mutual funds and other big investors, and that is what is going on with Apple, in my opinion. Taking a look at another NASDAQ 100 name here, Google still looking a bit vulnerable here, GOOG. Big break for Google underneath its 50-day moving average in huge volume. That was when it reported third quarter earnings. It's been below the line ever since. It came down to its 200-day moving average last month. It has rallied back, but just like the NASDAQ composite meeting with initial resistance at its 50-day moving average, this is another stock that is looks a bit troubled to me here, and not at a buy point yet. But if it continues to form the right side of its base and it gets past 720, 740, renewed signs of institutional buying, this may be a name I might want to own in the future, but certainly not now. All right, folks, headed into break number one. Got a lot to talk about today. We'll cover more market news when we come back. Ken Shreve with you. You're listening to Breakout Investing.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Still a very tricky market out there. We did have this kind of a mild buy signal flashed by the major averages the day after Thanksgiving at big percentage gain. November 23rd, volume was very light, half day of trading, but so far, it has amounted to something, some profitable trades, definitely. But with the NASDAQ Composite and S&P 500 bumping up against resistance here, Apple still under distribution, it's really hard to see the NASDAQ Composite making meaningful headway when Apple keeps getting crushed by institutional selling. So it's just a very tricky market to navigate. I think it's a market that, on the one hand, you can be long some names, and on the other hand, you can be short some stocks as well. So my Ultimate Growth Stocks model portfolio is a long-short portfolio. So even though I'm leaning towards have more long positions than short positions right now, there isn't a day that goes by where I'm not looking for additional short opportunities. But to do anything drastic just ahead of a jobs report tomorrow, I didn't want to do that. So I'm just kind of sitting tight with what I own for now, and we'll see what the jobs report looks like on Friday. Remember that two big acquisitions announced yesterday by Freeport McMoran. got a call yesterday on the show wondering if Freeport was a buy when it was down sharply yesterday, and I told the caller just to kind of wait things out, see how things play out over the next week or so, because clearly the market was not happy that the company is paying a total of $9 billion to acquire a couple of oil and natural gas producers, McMoran Exploration, as well as Plains Exploration and Production, PXP. Again, the total purchase price was $9 billion, also taking on a large amount of debt with the deal. The stock got crushed yesterday. It's down another 4.9% today to 30.57. And that was because Goldman Sachs downgraded Freeport today to neutral. And they just think that it's gonna take a while for the company to absorb these acquisitions, and they also lowered Freeport's price target from 46 to 38. So whether or not the selling is finally overdone in Freeport, I'm not going to venture a guess there. This is clearly a broken stock. Right now. Economic data earlier today, the latest data from Challenger, Gray, and Christmas showed that job cuts increased for the third straight month in November. Employers announced plans to cut just over 57,000 workers from their payrolls, up 34% from a year ago, and up 20% from October, when announced layoffs totaled nearly 48,000. So the employment picture continues to look sketchy at best, and again, hopefully we'll get some semblance of good news from the jobs report tomorrow, but frankly I'm not expecting much. The unemployment rate tomorrow is expected to tick higher to 8%. Remember yesterday, according to ADP, employers added 118,000 new private sector jobs in November, but that was slightly below expectations. Also had weekly jobless claims today. They were down 25,000 to 370,000. That was pretty good news. That was a bigger drop than expected. The prior week was revised slightly higher to 395,000. All right, let's take a look at some earnings movers today. It's hard to understand stocks price movement sometimes, but Lululemon hits an intraday low of $66.60. It is now trading at $73.15, so more than 6 points off its low, and they lowered their earnings guidance for the current quarter. So company lowers earnings guidance, and it's going to be up 6.7% to $73.15. I have not been a fan of Lululemon. Congratulations to the longs that believe in this company, but after a 1,500% price move since March 2009, I'm not interested in buying stocks in a late stage run like this. Despite a big move today, it's not out of the woods yet. It still has some pretty significant resistance at 74, 76, etc. But you know what? This could keep moving, and it could try to eventually break out over $78, $79 a share. Still a ways to go to do that, but when we come back, we'll take a look at Lulu's earnings report. Got to give the company credit. They are continuing to deliver strong bottom line and top line growth, but their guidance for the fourth quarter, many people say they might have lowballed it, which Apple tends to do. We'll talk about Lulu when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. So checking in on Lululemon here. Kind of a wild day of trading for this high-growth name. Shares are up 6.8% to 73.24. I guess you'd have to call it a bullish session for the stock. Volume is very, very heavy at 8.9 million shares. It is trading pretty much at its session high. Earnings were up 44% from a year ago to 39 cents a share, 2 cents better than expectations. Sales up 37% to 316.5 million. That was about 11 million above the consensus estimate. Same-store sales up an impressive 18%. For the fourth quarter, Lulu expects revenue of 475 million to 480 million. The estimate was for 490.5 million. Sees EPS of 71 to 73 cents. The estimate was for 75 cents. So a lot of people saying that guidance is conservative, but give Lulu credit for a pretty decent quarter. Again, like Apple, if Lulu's going to keep going up, it's going to go up without me. I really like to get growth stocks in the early stages of a price run, not the later stages. And after such a huge price gain since March 2009, I'm going to leave this one alone for now. Here's another name that I've been watching on and off, BioReference Labs, BRLI. They are a provider of lab testing services. EPS up 24% to 46 cents a share. That was in line. Sales up 16% to 176.1 million. That was slightly better than expected. Company said that Hurricane Sandy shaved about 5 million off of revenue and 6 cents off of EPS. So BioReference, I believe, is headquartered right in an area where Sandy really hit hard. So the stock is having a good day today, up 5% to 28.69. Ascena Retail Group, ASNA. This is a retailer that has been growing through acquisitions. Earlier this year, it acquired Charming Shops, a leading apparel retailer specializing in women's plus-size clothes. Ascena is also parent of Dress Barn and Justice. The stock right now is down 4.4% to $18.93. The company made 39 cents a share. That was 5 cents better than the consensus estimate, up 18% from a year ago. Sales were up 48% to nearly $1.14 billion, mostly in line. So investors sending the stock lower by a little more than 4%, like I said, to $18.93. And then Vera Bradley taking a big hit today. Vera Bradley down 12% on the day to $23.06. They made 44 cents a share, 6 cents better than the consensus estimate, up 38% from a year ago. Sales growth pretty decent, up 14% to $138.4 million. That was about $3 million, better than expectations. Piper Jaffray said the pullback is a buying opportunity. They maintain their overweight rating with a $32 price target. Investors not paying attention to that, though. Big sellers in the stock today, and Vera Bradley getting crushed. Take a look at shares of Canadian Pacific Railway. Heavy volume breakout over $94.83 yesterday. You can see a bullish day for the stock, heavy volume, and good follow-through today, up another 2.8% to $100.27. The rails don't look all that great there. Genesee and Wyoming, GWR, is maybe another stock in the railroad group that is 4 to 5% off its recent high, looking to possibly break out over some resistance here at 74. But outside of that, GWR, probably the best looking chart in the group. You've also got Union Pacific here. Not looking too bad, but you can see Union Pacific up 22 cents to 123.08, and Kansas City Southern, another railroad stock here, possibly could try to break out over $80 here in the near term. It is outperforming today, up 2.1% to 78.72. But certainly Canadian Pacific Railway, ticker CP, looks to be the strongest performer in the group right now. Couldn't find any news on Equinix, EQIX. This was a stock that was, I think I mentioned it earlier this week, starting to meet with some resistance at its 50-day moving average. Nice move for the stock today, up 3.4% to 187.07. But you can see stopped right at its 50-day moving average here. Last trading at 187.07. Its 50-day line is at 187.41. So nice percentage gain for Equinix today. It is a company that operates data centers around the country, but this stock is still not out of the woods yet. Still has a ways to go to, get back to its recent high, which was just over $210 a share. Good news today for Akamai Technologies. Nice gap up for the company, trading near its session high, up $3.50, 9.9% to $39 a share, after the online content networking company announced an alliance with AT&T. big telecom carriers like AT&T are likely going to be rivals for Akamai going forward. So Akamai has been seeking out licensing deals, and it got one today with AT&T. So investors like the sound of that. Stock is outperforming nicely today. Taking a look at BE Aerospace. And we'll take a couple calls here. I really like how BE Aerospace is holding on to gains nicely here after an impressive move last week. It's a company that makes aircraft interior products. Technically very strong. Definitely a good one for the watch list. All right, 877-927-6648. Let's talk to Travis, St. Louis, Missouri. How you doing today, Travis?
Doing great. How are you, Ken?
Pretty good. Pretty good, thanks.
I was taking a look at Yahoo. I've been in this stock since 1710, and I've been trimming it as it's climbed higher. I'm down to about a third of my original position.
Okay.
And I just wanted to see what you thought. Do you think this thing goes after 20 in the next week?
I mean, it is so strong. It's just so strong. It's working on 7 straight weekly price gains. I mean, your initial breakout for the stock was what, over 1650, something like that, and it made a pretty quick move over 19. So, you know, to me, this is a stock that probably at some point is gonna pull back to support around $17 a share. But I think you've been doing exactly the right thing by trimming the position. You've got zero sell signals here. You've got a stock that is just outright under unequivocal accumulation, no sellers around at all. So, you know, it's hard to see. It's hard to see how the market's going to react tomorrow to this jobs report. You'd think that we're probably going to move hard one way or the other. But I think you've been doing the right thing by trimming. But it's just not flashing any sell signals. So the one part of me says, you know, let it ride, because it could hit 20 pretty easily.
Okay. Yeah, I was getting nervous a little bit going into the close today with that jobs number in the morning. It really does feel like we're going to make a big move tomorrow, and I'd hate to see a majority of what I have as far as profit disappear in this thing on a big down day tomorrow or something. So
yeah, so I mean that's really the tough call. I mean, again, on the one hand, you're getting absolutely zero sell signals. You know, there's nothing in the chart that is saying, you know, get out of Dodge here. On the other hand, you are looking at a stock that is extremely extended, and you know, I don't really use overbought indicators, but I'm sure there are some overbought indicators that say this is overbought up here at $19 a share. So, you said you've been trimming it. How many times have you trimmed it? Just
two. I got long at 1710. I sold a third at 18 and a quarter. I sold another third at 1875. So now I've got another third that I'm just riding here, and I thought I might go for 20 since I've got a pretty low basis now with the gains that I've trimmed. You know.
Yeah, I would say since you're down to about a third of a position, my guess would be, my educated guess would be that even if the market does head lower on that jobs report, this is such a strong stock where I would not expect Yahoo to completely roll over here. You know, I think that you know, when was it last week? It hit a low of around 1834, 1850, something like that. So if if it's under a little bit of pressure tomorrow and the market weakens, so you trim the rest of it. But this is not a stock that I would expect is going to completely roll over off its top here.
Right. All right. So, good enough, man. Appreciate your input.
Okay, Travis. Thanks for the call. Appreciate it as well.
Thanks, Ken.
All right. Okay, next up, Altamont. Is it Altamont or Altamonte Springs, Florida? I believe we're going to talk to Kern next. How you doing today, Kern?
It's actually Kem, K-E-M.
Oh, Kem. Gotcha. My bad. That's what it says on my screen. It's just my eyes are getting worse. What can I say?
Okay. If you could take a look at Cheniere Energy, LNG.
Yes, sir.
There was some news out a few days ago about they're going to start benefiting from exporting natural gas. And, of course, they liquefy it before they export it. But looking at a 6-month daily chart, I noticed that the last 3 days the volume has been building, and it looked like it bottomed out at about 1385, and that was back on the 13th of November.
Yes, sir.
What I'm wondering, is it too late to get into this?
Well, so here's the deal. This is a classic technical breakout, and so technical breakouts in my book are a bullish development for a stock. You had some initial resistance levels right around 1650 thereabouts. That was 1648 was the high it made back in late October, early November. Volume has been pretty strong in this stock since mid-November. So you're talking 3 weeks where it's been moving higher, and there's been pretty good volume expansion. It is a stock that is under accumulation. Now, the bears will say that you mentioned that 1385 low. It's been a pretty straight up move off that bottom, 1385 to around 1760 or wherever it's trading right now. I would say it's okay here. I would say it's okay to start with a small position. You get a pullback down to that 16 area, maybe 1550, 16. You can add a little more so long as that pullback is in light volume and you're not seeing signs of institutional selling on that pullback. I like the look of the stock here. I like the fact that it's under accumulation, and it looks to me like it could be in the early stages of a breakout still.
Okay, good deal.
All right.
Okay, thank you very much.
Ken, thanks for the call.
All right.
All right. Stockton, California will be our next stop. We're going to talk to Sam. Sam, good to hear from you again. How are you?
I'm fine, thank you. Again, thanks for taking my call. I'm interested in this ETF called Ireland, IRL. And I've been watching this. It looks like to me it's kind of basing and it's ready to break out for last few days, but I need your input before I say click.
Yeah, it's a stock that it's made a nice move from $8 a share. That was the intraday low that it hit. Basically, came down to its 200-day moving average. Hit a low of 8 back in mid-November, and it's rallied back up to about $8.84. So technically, it's pretty strong. Here's the deal: couple of yellow flags here that I notice immediately. First of all, it's a really, really thinly traded fund. Have you noticed the average daily volume on this thing, Sam?
Yeah, it's about 20,000.
Yeah, so that's super thin, and I'm not a big fan of these. I know there are a lot of ETFs out there that are thinly traded that can still work, but I'm not a big fan of funds that are this thinly traded. The other thing, the move from $8 up to $8.84, I'm not really seeing any volume. So I'm seeing, even though it's thinly traded, it's had some downside moves where it's traded 50, 60,000 shares. So it's a fund that, when it was falling in heavy volume, and when it's been rallying in light volume. And that's not it's not really what you want to see. You want to see it the other way around. This to me looks like a fund that is still net under a little bit of distribution here. So it has potential, but what I expect this might do is if it keeps moving and starts to retest that prior high around $9, wait for a little down drift in the stock. Maybe it hits 9 and then it goes down to 890, 880, something like that, and then wait for a good volume push where you get 50, 75,000, maybe even 100,000 shares, and then you get a bona fide technical breakout. That's how I would play this. I wouldn't be buying it right here though.
I got you. Thank you so much. So the key is that volume. Thanks again.
Okay, Sam. Thank you. Yeah, there's a lot of ETFs out there that are thinly traded, and even I don't like to buy thinly traded stocks, and ETFs are slightly different animals. New Ireland Fund has got some positive things going for it. It's not that far from its 52-week high, building the right side of a base, but as it built the left side of its base, it really came down in very heavy volume, some distribution. It's been rallying back in light volume, and again, only 3% off its high, but really would like to see more accumulation in this fund before buying. That's a New Ireland Fund, IRL, that Sam was asking about. All right, folks, headed into our final break. Appreciate all the phone calls today. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. A pretty good day for the markets here. Not much volume behind the move today. NASDAQ volume tracking about 5% lower than what we saw Thursday, which was slightly above average at nearly 1.8 billion shares. NYSE volume much lower than the above average tally of 756 million that we saw on Wednesday. Again, a lot of that had to do with Freeport-McMoRan, big volume in Freeport-McMoRan yesterday, tracking about 20% lighter today on the New York Stock Exchange. That said, indices have pretty good gains here. Let's check in on all three of them. The Dow Jones Industrial Average up almost 38 points now, trading very close to its session high at 13,072. The S&P 500 also up near its session high, pretty much at its session high now, up 4.5 points to 1413, almost 1414. And the NASDAQ Composite looking pretty good here. It is up close to 15 points now to 2988. So that is what we have there. You know, earlier in the show I mentioned BE Aerospace, BEAV on the NASDAQ. Really like how this stock is holding on to gains. You can see the big run it's made from $42 a share all the way up to 47, 48. The stock is up another 1% today to 47.52. And I just wanted to show you a weekly chart for BE Aerospace and just show you what bullish price action looks like. BE Aerospace recently broke out from a cup with handle pattern over 46.18, and I'll tell you what, if you can get another couple of weeks here, I don't want to see it keep moving higher because then it's just going to get extended, but if you can get some sideways movement here, it could present another buy opportunity. So BE Aerospace is a good one. If you miss the initial breakout, you could get another opportunity to move it, but I would just like to see it kind of trade tightly sideways for at least a couple more weeks, and we'll see what happens there. Siri, S-I-R-I, this is not, it's a low price stock, but the company did have news today. They announced a $2 billion share buyback and also a 5-cent a share special dividend. The stock is, still holding its 50-day moving average here, has definitely been showing relative price strength in the market. It was a $2 stock back in the summer at $2.81 now. That's a pretty nice percentage gain, but after early strength, it's only up about 4 cents now. That's still good for a 1.4% gain to $2.81. Some other names here that are looking interesting. Newstar, NSR. This is an example of a base building stock. It could be ready to add a little bit of a handle area here on its cup-shaped base. Newstar gets more than half of its revenue from routing and managing phone calls and text messages for major U.S. telecom service providers. And we'll swing over, take a look at a weekly chart for Newstar. These are the types of charts that I like to look at if this market is going to pop into the end of the year, and we do see some renewed signs of institutional buying in the major averages. This is a decent looking base. So Newstar, I would love to see it form a handle, basically meaning it's going to drift lower for at least a week, maybe 5-10% pullback. That could pave the way for a technical breakout here. Let's take a look at Amazon as well. Amazon is working on a new base here. See, it's working on the right side, working on its third straight weekly price gain. So there's a lot of base building stocks out there, stocks with potential. Amazon still has work to do to complete its base. Coming up after the close, let's see what Smith & Wesson, SWHC, has to say. Big quarter of growth expected. So we'll listen to Smith & Wesson after the close today. Coming up next, the Tom O'Brien Show. Thanks very much for tuning in, folks. I'll see you back here tomorrow, 3 o'clock Eastern. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to mastering probability today, because your journey to extraordinary rewards is just one click away.